All right, you're going.
Hey, good morning. All right. Before we get started, just want to give some thanks to God, and just want you guys to know that this is actually part of my ministry, and I'm sharing this information with you, but all glory goes to God. Before we jump into this, I need to read you a disclosure. I'm sharing this for informational purposes only. This is my own proprietary system as a result of my own research, and it's a strategy that I use in my own real account. While it's a principle-based strategy, the strategy is subject to change. By sharing my trading activities, it's not a solicitation from me to buy or sell securities for others. Trading does involve risk with possible loss of principal. Sharing my live trading sessions should not be constructed or construed as investment advice. All right. With that being said, I'm going to introduce to you kind of like the agenda for today. I've got this system called Smart Money Roadmap that we'll be going over, and we'll be going over some trading psychology. The psychology is derived from institution psychology. So we're going to start thinking like institutional investors as opposed to retail investors. And that will allow us to navigate the market and be more successful. All right. So the Smart Money Roadmap. What I am going to do is use higher agency. Basically, higher agency is a new concept that has come along with the advent of artificial intelligence, AI, and a lot of the other technical tools that we use in our lives, not just for trading, but higher agency can apply for any occupation that uses AI or the latest and greatest advancements in technology. I'll be showing you how I do that, as well as we're going to, again, be diving into the Smart Money Roadmap. And let me explain what that consists of. It will seem like a lot of data and information, but the way I gather it is very fast and efficient. I take basically a screenshot of the charts, which I'll get more in detail about. And I send it to ChatGPT with a list of questions, which I'll also share with you. However, the data that I am looking for as we trade, let me explain what we trade. Our instrument of choice is SPX. It is a cash index. I'm not going to dive too deep into the difference between cash index, ETFs, and equities. However, it is a cash index. There's a lot of benefits to trading it, which I'll go into over time. But just as an overview, the technical analysis consists of we'll find the developing price ranges. So as you know, stock will move up and down, but there's always a range. And so we're going to define what that range is. We'll look at prior highs. We'll look at yesterday's highs. We'll look at the low of yesterday. And generally, price will fluctuate between the highs and the lows throughout the regular trading session. And reason being is the institutions are searching out liquidity. We think as retailers that, we're buying, we're selling, it causes price to go up. Well, actually, price is actually driven by institutional trading, with some degree of it retail buyers and sellers. But as we go through this journey and along today's path, I'll be able to show you where institutions actually enter the market, cause the price to go towards a liquidity target. So they actually have targets that they go towards, and basically they are triggering retailers into either buying or selling. We're either chasing the price or we're panicking because the price is going against us. So that is the highs and lows. Next, I'm going to show you a study or / indicator that I use. I don't use very many indicators. I actually use one primary indicator to help me determine the direction that price will go in. It tells me the bias and the regime, which is bear or bull. Bull is when the price is going up, bear is when the price is going down. And the study that I use to help me determine that is called the VWAP. VWAP, VWAP for short. It stands for value weighted average price. That is very important because institutions use that as a scale. So they are able to determine when to buy and sell because they're actually active in the market as well for their clients and, so forth. And so that study is what they use to determine a good selling price or a good buying price. We'll go deeper into the usage of the VWAP soon. I'll be using it in our live trades today. The market opens at 6:30, by the way. So this is all pre-market activity that I'm sharing with you. And this is how I prep for the trading day. A bulk of it. This is the bulk of my prep. Also, one more thing about the VWAP is it acts as a magnet. So when price goes above the VWAP, institutions are basically buying. The price goes up and then they will distribute. Price comes down and generally the price is headed back towards the VWAP line. And we're able to use that in our trades. I'll show you. After the VWAP comes the resistance levels. Basically, the resistance level is the top end of the price. So basically, price goes up to a target that has been identified as a liquidity zone by the institutions. And they do what's called a sweep. They gather all the money, if you will, at that price level. And then it's at a resistance. So that means it's at the ceiling and it will come back down towards the VWAP line. Same with the support level. Support level is the downward movement of price. It hits a certain level, which I'll show you how to define. And it will generally hit that level, do its business, which at that point would be it's buying and absorbing from that level. And then it will do what we call a reversal and go back towards the VWAP line. So you can see the VWAP line are starting to get an idea of what the VWAP line is. It's a magnet. Think of it as a magnet, okay? And that will make our trading much easier and less stressful and more profitable. Next, we look at liquidity pools and cluster targets. These are, again, where price is going to gravitate and go. And these are high probability. So we don't predict in our trading. We look for confirmation of our probabilities, high probabilities. So that's the way we trade. And I'll show you how to define where the liquidity pools and cluster targets are located and where price will and could probably go. And then we've got the quarter system. So I'm oriented towards sports. Got a strong sports orientation, so I break everything down into a quarter system: first quarter, second quarter, third quarter, fourth quarter, and I look at the behavior of the market during each quarter. Because there are certain characteristics that we'll call the institution smart money. So they've got a game plan most days. Quarter one is where they trap traders. Yeah, I know, like that's a tough concept, right? But their main objective is to take retail traders' money. So they're trying to trap you in a trade. They do fakes. They go in one direction and then turn in another. However, I'm going to show you how to use the VWAP line and patience to not get trapped or faked out. Okay. And then quarter two is decision and expansion. So we're able to see the true direction that smart money institutions are going to take price in, at least for the second quarter, that is. And they will expand in that direction, meaning they're tracking towards liquidity zone itself, and that being the target. Q3, quarter three is usually accumulation. So there's this pattern where it just stays in a range. It's an accumulation. They're absorbing orders. Price is pretty stable. And a good opportunity to go in and do some scalping, which is basically you enter your trade, you hold it for about 15, 20 minutes, you get a profit, you close it out, boom, done. And you get ready for the next one, the next trade, that is, which brings up day trading. Okay, so with this strategy that I use, the Iron Condor strategy, which I'll define for you, it's a range-bound strategy. So basically, we're just boxing in the price. And what ends up happening is within about 15, 20 minutes, it should show a profit. And I wanted to bring up setting up your account in, say, Robinhood, for example. You're allowed 3 day trades a week. Okay, so you don't want to exceed those 3 day trades unless your brokerage account exceeds 25,000. Let's see, how do we that on the?
Okay, and just stop it when you're done.
Okay, cool. All right, so back to the day trading and Robinhood. Sorry about that intermission there. But we need to set it up a certain way so you get level 3. So you can get level 3 option trading approval. So you'll need to connect with me, and I'll help you with that. Right now, this live stream is simply for friends and family. So, it's just for you guys before we, open it up to the masses, right? So you can send me a text message. Most of you have my text number, and we can set up a time for you to be able to get with me, connect with me, and set up your broker's account so you get level 3 clearance. And I'll be able to go over quite a bit with you in that regard. Okay, so what is next is, let's see, we left off on brokerage setup, and we are working our way through the quarter system, and believe we are talking about the accumulation and distribution. So what you'll see at that point is a chop. So we call it a chop when price is just between the ranges. So it's just chopping in there, which creates an opportunity to do a quick scalp. So that's when I'm, as again, just holding this, the position for about 15, 20 minutes, and then exiting and with a profit, hopefully. And then comes Q4, which is like the final move of the day. It's usually another sweep and reversal, which you'll get an opportunity to see. The whole idea is to give you a play-by-play breakdown as the day progresses. And take this ride with me, okay, of an actual trading day. Okay, so that's the smart money roadmap logic, and I'll be applying that. And I just wanted to go over, so that's basically how our technical analysis is going to work. I'll be taking a break in just a second and actually use high agency strategy, basically taking a screenshot of the market structure. That's a new one, market structure. And basically that's a layout of everything I described in terms of the highs, the lows, resistance and support, and the liquidity pools, clusters, targets, so forth. I'll be back to define exactly what those are, and then we'll be able to see some live trading. However, before I do that, I just want to go over just a few key concepts and cycles in regards to smart money psychology. Okay, so this is the way institutions actually think about things. So this is a quarter 1 through 4 psychological cycle. During quarter 1, there's a liquidity grab slash what's called a stop hunt. And the purpose of the liquidity grab and slash stop hunt is to attract breakout traders and trigger stop loss orders. So they're trying to get you to panic. They bring price, to your position, and they do so with options. I guess I'll be explaining like options one-on-one eventually, but they bring the price to your position in such a way that you panic. And what they're doing is they're tricking the retail trader into buying so they can offload. So they trick you into buying. You enter your position, and then it just shoots in the opposite direction of what you had anticipated, which brings up a concept of retesting, claiming, accepting. And these are all decisions that I make based on the VWAP line. So I'm going to show you how to use that so you don't get tricked. In the second quarter, there's the distribution slash rejection phase, right? The purpose is to build positions while retail is confused. So they're causing like some confusion, right? And they're trying to get you to react to that. And the psychology is let the retail investors think price is stable while they're quietly accumulating. Their accumulation, they're taking orders. I mean, this is truly a game of supply and demand, which I'll go deeper into as well. So these are all key concepts that we'll be diving into. I know it's quite a bit, but it's the same thing every day. So we'll just go over these concepts every day, and I will provide a worksheet that you can work from. A lot of words, but it's not really that difficult once we put it all together. And then quarter two is what we call displacement. Quarter three, is what we call displacement, which is the purpose of the displacement is to reveal true direction with a fast move. So in quarter three, we're actually able to see the true direction that smart money institutions want to take price in. It's usually towards another liquidity target or cluster. And again, they want to absorb orders or they want to sell. And we use the VWAP to help determine those behaviors. And I'll show you how to technically recognize the targets that they're going after as well. Okay, so we've got some things to learn, but it's not very difficult to identify once you know what you're looking for. And then we've got Q4, which is accumulation, reversal, continuation. Accumulation, reversal, continuation. The purpose is to collect liquidity before the lows, right? Below the lows. So they're going for lower targets most times in quarter four. And the psychology there is to trap traders at the bottom before the next engineered move. So everything's pretty much engineered by smart money institutions. However, I'm going to give you key insights into their psychology that will help you navigate the market and be a successful trader. So the engineer move is geared towards liquidity targets. Smart money targets prior highs, prior lows from the day. Prior highs, prior lows. I'll teach you what a fair value gap is, what VWAP reversion points are, imbalance zones, and stop loss clusters. So here's some interesting psychology. So the retail behavior based on the moves that smart money exploits tends to be the retail trader will chase the breakouts. They'll panic sell the breakdowns, and not give the play time to develop. So they'll bail out of the play. They chase the green candles and they panic on the red candles. Smart money responds to that by creating the fake breakouts, creating fake breakdowns, sweeping stops intentionally, inducing emotional trades. So they were trying to get us to be emotional. So that's another thing, is you want to be calm. I'm going to help you develop a thesis, and or show you how I develop my thesis. And that gives me the confidence and conviction to enter my positions and do my trades without the emotions. Smart money tools and traps. They use liquidity sweeps. They use displacement candles, which are like big, huge candles that, get our attention and cause us to make sometimes the wrong moves. sometimes the right moves, sometimes wrong moves. I'll show you how to discern the type of move and based on the VWAP and the displacement candles as they are produced. There's this concept called inducements, breakers / mitigation box, engineered pullbacks. So these are all manipulations of price that the institutions employ. And basically, we need to learn how to trade with smart money instead of against it. And again, I keep referring back to the VWAP, but that's how important it is. It helps us trade with smart money instead of going against smart money. We want to go in the direction, not against it. Gonna hit on entry after liquidity sweeps. Need to define what a liquidity sweep is for you, not before. We watch those displacement candles and we use them as confirmations and commitments from smart money institutions to actually go in the direction that a commitment to go in a specific direction. And we'll learn how to identify Q1 through 4 rotations. So they rotate through the trading session, not frequently because, again, they're trading millions and millions and millions of dollars and shares of the instrument and can't really rotate on a dime. So when they truly rotate, it is truly a commitment to go in the direction towards a liquidity cluster / target or back towards the VWAP. So we'll be able to identify that, and we'll be able to avoid buying high when the price is high and we sell low. I mean, that's the exact opposite of what we should be doing. However, that is the behavior that they induce, right, from us so that they are profitable. Okay, so that's the intro, pretty long, but we'll be putting that into play and you'll see how it works. So I'm actually gonna take a break right here and I am going to use the high agency as I was saying and come back with our technical analysis for the day. All right.